Good morning, everybody. Remember me? The younger Novak. What's going on, Steve? Hey, Rob. Can you hear me? Guys, everybody hear me okay? Good to see ya. Great to be back. Good morning, Jeffrey. Erla, nice to have you. Hey, Izzy got game? Good. Thank you. Man, it's good to be back. I posted in the room earlier, you know you like your job when you're excited to come back to work. And I am. I'm very excited to come back to work. I miss trading, miss teaching you guys how to read indicators. So welcome to the room. If you're brand new, I'm Mark. You're stuck with me for the next 3 hours. We're going to have a good time. We're going to go through the routines, talking about the stuff that we always talk about, guys. I'm going to ease back into it, make sure I don't stumble over anything. Every day I go to forexfactory.com/calendar and I check for news. What I'm looking for specifically are these high impact or the orange boxes, medium impact news, because these can move the market a little bit, guys. And as you can see, there's not a whole lot. There's a lot of people talking about who knows what, but none of it's really high impact. Most of it's well after class. So not going to worry about it, but I do check this every morning. I just want to know what's going on. And I'm going to head over to the Nexgen site. But I wanted to share this, especially coming in after a week of my brother teaching. Every time he teaches, it goes one of two ways for people. Half of you are absolutely ecstatic over the moon from the little tidbits that he gives you, the little extra knowledge that he's able to bring to the table. And the other half of you are like, holy smokes, what's he talking about? And guys, that just brings me to this. The key to everything is having a foundation, getting the basics, guys, and then getting better with it. So for you new users, I'm going to blanket with very conservative rules. There's going to be a lot of recognition of advantages and a very solid plan that optimizes your chances of success. I'm going to paraphrase here, but guys, as you grow, so will the opportunities. As you understand some very basics, it's going to open a lot of doors for you. So this classroom is designed to teach you the basics first. And everything that I talk about is going to come straight from the trading guide. This is where all the answers are. Ooh, it's got a new look. Look at that. I go away for a week and they change stuff on me. I like the green. Look at that. So forgive me if I stumble around it a little bit. Guys, understanding all the basics comes right from this first page. And I want to find my glossary of common terms. Wow, look at all this stuff. How cool. Man, they changed it on me. I apologize, guys. Here we go. There's our glossary of common terms. And I want to go to one in particular, guys, because I feel like it is one of the most important things. And that's this high probability trade. So forgive me for stumbling a little bit. A high probability trade, guys, when each indicator on every chart agrees with the rules for the trade, triggers are the strongest, no termination conditions exist, and there's no trouble spots between you and your targets, guys. This is the trade that we talk about for the first hour. We talk about it every day for the first hour. Because this is the trade that typically wins 70 to 80% of the time, the high probability trend trade that we talk about. This is a trade that creates a lot of confidence because you're really, with a win percentage like that, confidence comes from the memory of success. But the most important thing, guys, is this is the one that teaches you to read your indicators. And that's kind of my little segue into my PowerPoint here. Because chart reading is the goal. Especially for you brand new users. Everybody wants to be a day trader. I want to be a day trader. I want to make $1 billion, right? Guys, you've got to learn to read your indicators. You've got to take what these indicators are telling you, and if they're giving you the thumbs up on advantages, well, then you're going to turn that into a trade. 90% of your day is going to be spent sitting on your hands, probably doing nothing. Hey, JK. Welcome to the room. Nice to have you. Guys, 90% of your day is being patient. 90% of your day is sitting on your hands. 90% of your day is not being active in a trade. We're just going to wait. We're going to wait for advantages to come together. And then when they do, there's your 10%, guys. And that 10% is where the magic happens, taking these advantages, translating it into a trade. And that's what we're going to talk about this morning. Once you understand what your indicators are telling you, you will understand where the market is likely to continue. And initially, this becomes your entry for the highest probability trend trade that you can take. Hey, good morning, Gary. Vacation was amazing. I can't remember the last time I took a week off, didn't bring a laptop, didn't hook into Discord, didn't talk business. I did talk a business a little bit with my brother, but man, it was awesome. I'm so glad to be back. Likely to continue, guys. This is going to be your entry for the highest probability trend trade. That's going to take you to likely to go. This is going to be where you can look at your charts and say, man, that's a great spot for this market to go to with all of these advantages. Let me take profits there. And then you're going to understand where the market is likely to stop. And guys, this is the area, this is what we call a termination condition. And this can reverse the market, create untradeable bounces. So what we're going to do this morning for the first hour is we're going to talk about the 3 advantages that it takes to get you into a high probability trend trade. We're going to use chart reading to do it. And there's only 3 rules. Try very, very hard to keep it as simple as possible, especially for new users. We're not looking for trades, guys. We're looking for 3 advantages, and the result of having them is a trade. And that line of thinking is going to pay huge dividends long run to you. We're going to let the large chart tell us that we have strong trigger lines. This first rule creates the advantage of momentum. The second rule is going to make sure that we're not trading into any of those likely to stop areas. And this is going to give us room to our profit targets. We're going to call that the advantage of a clear path. I'm going to tell you guys, these 2 right here, momentum and a clear path, are enough to build a very solid trading plan. So I don't want you to bypass those trying to find your entry. But once these 2 are present, once we have momentum, once there is a clear path, you're going to use the third rule to define your entry area where the market is most likely to continue, guys. And this is your little equation. A trade equals momentum plus a clear path plus an entry area. Each of these advantages are going to be very recognizable on your charts. And as a brand new user, insisting on having them is going to help you find the correct trades following rules. These 3 rules happen on only 2 charts. There is a large chart and a small chart. Large chart leads the way. Large chart is where we start. Large chart will define the direction of the market. The large chart will define the momentum in the market, and the large chart will define the areas. And this is a very broad stroke of a brush, guys. It's a slow-moving chart, and it really shows the overall opinion of the market. Rules 1 and 2 are met on that large chart. They have to be met on that large chart. And when they are, that's when we're going to go to the small chart, the faster chart. This is a refinement chart. Inside of every 1 bar on the large chart, there's typically 20 to 30 bars that you're going to see on this smaller, faster chart. It's nothing for more than an X-ray. It's a refinement. But it will pinpoint your entry for the highest probability trend trade. It is going to define that likely to continue spot, guys. And by using a smaller, faster chart, you can reduce your risk and you can increase your profit potential. And that's where rule number 3 is going to come into play. We use these 2 charts because it really is. Who are you trading with, or who are you trading against? The large chart, that slower chart, that big chart, guys, this is the large crowd. These are the people, the men and women that have the money, the influence, the charisma to create trends, to establish momentum, to react to those key areas. And typically, the path of least resistance is simply go with the flow, follow the crowd. But there's always a small crowd, and this is your small chart. And these guys create little shoves against everything that the large crowd wants to have happen. This smaller crowd is intent on taking very quick profits, using the money that they have to create that little retracement, guys. But their retracements typically fail 70 to 80% of the time, which is why when we pinpoint their failure spot, that becomes your entry for the highest probability trend trade. And that's what allows us to have that percentage, to have a trade that can typically win up to 70 to 80% of the time. So only 2 charts, guys, only 3 rules. Going with the flow pays dividends. and then the path to getting to where you want to be ASAP, because that's what we want, right? We want to get to the point to where we're reading our charts quickly, to where we're doing the analysis rapidly so that we can enter the market when it's time to enter the market. Your path to getting there sooner than later, it begins with posting your trades in the class, guys. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to break them down individually. We're going to look at them as pictures. I'm going to give you all the tools that you need to study it. And my promise to you is by the end of this classroom, you will have been given everything that you need to be successful with the software. But you've got to practice. You've got to simulate and post those pictures in the room, because we're not just looking for wins and losses. Guys, we're looking for chart reads. So I want you to post in the room, but don't just go, hey, Mark, check it out, I won. Say, Mark, this was my read on that momentum, that first advantage. This is how I felt about the clear path, rule number 2. And this is exactly where I got in, where I got out, and why. And if you do that for me every time, guys, every picture that you post in the room is like a personal, it's like a private session. I'm going to take your chart read. If there's something that we could do a little better, we'll do it a little better. If there's a lower risk entry, if there's a higher profit exit, guys, we're going to analyze all of this stuff. And what's kind of cool is you're going to start to recognize some patterns, and I'm going to start to recognize some patterns in you, and we're just going to work together to get to where you want to be. We will simplify. I'm going to talk about 2 trades this morning. I'm going to talk about the high probability trend trade. We're going to focus on our chart reads, recognizing those advantages. That will take you to a second trade. That's what we call a medium probability trade. And a medium probability trade means that most of your indicators are going to line up for the trade, but there may be a problem. Your ability to read your charts is going to define that problem. You may have to manage a little more aggressive. Your ability to read charts is going to allow you to do that. So we're going to start very basic. 2 charts, 3 rules, and that will take you everywhere you want to go. You got to know what it looks like. That's what we're doing, right? Everything is a read. What's it look like when the rules are met, guys? That's the second part, and that's what's going to make it easy. And that's where the spreadsheet comes in. This is the second piece of the puzzle in getting to where you want to be as soon as possible. And the spreadsheet that I give you guys every day, the same one that was downloaded on your computer, it's in your Nexgen Study Picks folder, but I like to share mine. There are 4 tabs on this spreadsheet, and the first one is a trade tracking sheet. And that's all it is. It's just a trade journal, so you can see what you've been doing, track your progress, every trade that you take, the advantages. But I think the part of this that's really going to help you guys out is there's a feedback from class section, a notes section. So you may take a trade and there might have been a small problem, and that's okay. That happens every now and then. But you're going to get the feedback. You're going to identify what the problem was, and I'm also going to give you steps to overcome that problem. There's a section how you can post hyperlinks into the spreadsheet, how you can annotate your charts for best results. That's identifying that momentum, that clear path, that entry area. The more you fill out this section, guys, the quicker you're going to get to where you want to be. There's the 101 section, which is dedicated to the 3 rules of the high probability trend trade in green, and then what it looks like to have them not met in red. You're going to fill this out. This will be a part of your study. There is the favorite look section. This is where every time you see that pattern that fits your rules, that wins more than it loses, take pictures, get them in here, guys. Let's commit that look to memory. There's a management section, patterns that repeat themselves, termination conditions. Your goal with this 3rd tab is to make it look like the 4th tab, guys. And this is where I've put a little bit of work in for you. And you've put in a lot of work for me, because the green section is almost 400 pictures of you guys using the software, finding success. There's the client trades, which is what this is, but it also includes the entry sequence for the high probability trend trade, both short and long. There's a management section. There's patterns that repeat themselves. There's the terminations, guys. There's a lot of information on these spreadsheets, and what you're going to do is you're going to begin to recognize patterns that are bringing you success. You're going to begin to recognize patterns that may be taking that success from you. And when you post in the room, I'm going to begin to recognize the patterns in you, and I promise you, it's annoying. Ask my wife. I need 4 or 5 pictures from you telling me what you see. We will identify the challenges that you have and we'll begin to work together to fix them. So for those of you that are brand new, I'm talking a lot this morning, I know that. The first hour really kind of feels like a lecture. We're going to talk about these 3 rules. We're going to break them down individually. The second hour, the third hour are dedicated to you guys posting in the room, getting feedback on everything that you do. So if you are brand new with me, do me a favor because I have been out for a week. If you're new here, give me a little wave or a thumbs up or say hi in the chat box. And I want to tell you right now that your first couple days with me, guys, feel like this right here. You're drinking from a fire hose. There's going to be some information. Hey, JK, great to have you, man. The information comes at you and it feels really fast in the beginning. And I know I've been day one myself. But what we're going to do is we're going to break it down individually. And if you allow it to be simple, if you try not to overthink it, what you'll find is by day 2 or 3, the language makes sense. By day 2 or 3, you're going to start picking these trades out. And you just got to build that little foundation. And everything starts with a large chart. And this large chart has to have strong trigger lines, guys. That's that advantage of momentum. And it's really pretty simple. Let's do 2 lessons in one on this chart. First of all, JK, if the background on your large chart is green, the market's going up. You're going to look for rules to be met for high probability trend trades long. If the background is red, the market's going down. You're going to look for rules to be met for high probability trend trade short. So the background color is going to determine what direction you're looking, and it really takes a lot of the pressure off. We don't try to anticipate reversals or be the first one in, guys. We're going to go with the flow. So when the background is green, when the market's moving up, both your small triggers, the solid lines, and the large triggers, the dashed lines, have to be green as well. And if they're not, you'll never have strong triggers. Strong triggers means that the small triggers are up, above, and separated from the large triggers. And I want you to picture scissors that are open and ready to cut. The space between the small and large, when the background is green, when the smalls are green, when the large are green, this is your strong trigger look. And when you have that strong trigger look, the odds are favorable for the market to continue up. And you're going to hear it all day long. Odds favorable momentum. You're going to see it typed on charts. Guys, odds favorable momentum can push a market in the direction of the trend. And when the trend is down, the smalls and the large should both be red, just like the background. That space created, scissors open, ready to cut. This lets me know that I have strength, strong triggers. I have the advantage of momentum, and the odds are favorable for the market to continue down. Odds favorable momentum is our battle cry in this room. But when those scissors close, when the smalls return to the large, guys, and they work their way inside, this is the weakness. So we go from strength to weakness. We go from odds favorable for the market to continue in the direction of the trend to anything can happen up or down. And what you're going to find is that patiently waiting for strength is going to really create some advantages for you because strong triggers can push the market in the direction of the trend. Strong triggers can even break some of those key Fibonacci areas. And strong triggers can cover some of the mistakes that we all tend to make as new users. Good morning, Morgan. Thank you. It was amazing. And guys, when I have strong triggers up, or I have strong triggers down, that's when I'm going to use that smaller, faster chart to buy Fibonacci support or to sell Fibonacci resistance. On this large chart, you're going to see these tails on that single bar. That's the entire retracement and pullback that the small crowd creates. You will be able to pinpoint where that tail is most likely to form for both long and short, high probability trend trades. So guys, is everybody good with me? This is the shortest lesson that we do. Separation, scissors open means strength. And once those scissors close, anything can happen up or down, guys. Rule number 1 is going to set the tone for looking for trades. And if you don't have momentum, it's okay to sit on your hands. Wait for that market that's pushing. But once you do, we need to make sure that we have a clear path. We're going to not trade in determination conditions. We're going to have room to our profit targets, guys. And this again, large chart. And all a termination condition is a Fibonacci based indicator that can stop the market. I'm going to give you guys this picture in the room as well. I will give you my PowerPoint. So I want you to, once again, try to keep this simple. Horizontal lines on your large chart may stop the market. Horizontal lines on your large chart may create an untradeable bounce, might reverse the market completely. And one line is not more important than another. So understanding what they are, get the language down, helps a little bit. There's divergence highs and lows. And divergence is a way of saying, hey, there was a loss of momentum in the market. You'll see a magenta line, a pink line, coming off of a pivot. This says, hey, Mark, we were going up and now we're going down, and we lost momentum when we changed directions. You'll also see it as a cyan line or a light blue line from a low. Red Fibonacci resistance. When the market is trending up, this is a line that can stop it, that can create a bounce, that can reverse the market. And then the blue Fibonacci support does the same thing, the opposite direction. When the market's trending down, these blue Fibonacci support lines can stop the market. They can create a reversal or even an untradeable bounce. And then we have yellow 1-to-1s, and these are like fibs in the moment. These print real time. If the market's trending up, they may behave as resistance. If the market is trending down, they may behave as support. So you don't have to know how these come to be or where they come from or who created them, but understand that these are the areas where that large crowd is making decisions. These are the areas where the buyers might buy, the sellers might sell, where profits are taken. And guys, you know about them long before you ever reach them. So to determine whether or not they're likely to stop the market when they have the potential to create that reversal, since the large crowd reacts at them, we're going to let the large crowd get to them. And that means that price trades up and reaches Fibonacci resistance. When it reaches that line, your dynamic Renko bars reach Fibonacci resistance, whether it is a divergence high line, yellow 1-to-1s, or that red fib, all you have to do is ask yourself, where are my triggers? And if your triggers remain below resistance, this area may reverse the market. It may stop the market. It might create an untradeable bounce. If it does reverse the market, if price reaches that area, the triggers remain below, and then it creates a reversal, we're going to call that a strong top. And that's the precursor to the highest probability trend trade that you can take. And then if that market's trading down, price is dropping, and it reaches Fibonacci support, everyone in this room, the only thing you have to do is ask yourself, where are my triggers? If they remain above support, this is a termination condition. It may reverse the market. It may create an untradeable bounce. And if it does reverse the market, we're going to call it a strong bottom, guys. But the bottom line is that if rule number 2 is not met, if you reach an area, the triggers remain below resistance or above support, no trades into that area. We're going to wait for the reaction. Let's see if we can open up a chart and see just how powerful termination conditions may be. And guys, there's an outstanding one just this morning. Price goes all the way down to this key area, 57.62, and sure enough, it creates the reversal. Off of that reversal, it produces strong triggers. And guys, there's strong triggers and one of those tails, and a lot of you might have taken that long trade right there. Support creates a bounce. Support creates a bounce. Resistance is the beginning of the reversal. And let's see, right off of resistance, guys. So you can do a little bit of study. You can scroll back on a large chart, and you can begin to develop a little faith in the idea that there's no reason to trade into these areas. They simply take away your advantage, guys. But areas break all the time. If they didn't, we'd be caught in this little room just rattling around. When is an area broken? It all goes back to trigger lines. When the small triggers, both lines of the small triggers and both lines of the large triggers get below support, support is broken. It begins to behave as resistance, guys. And this area is broken. The path remains clear until you reach the next line. And if everything is going up, small triggers, large triggers get above resistance, guys, resistance will begin to behave as support. The path is now clear until you reach the next line. One of the things that I want you to avoid the temptation of doing, and I'm going to take a picture of the picture for this one, and that was not the picture that I wanted to take. Let's try this again. There we go. I'm going to make this Fibonacci area black. And even with the black line, it's not red or blue. It's not the colors, ladies and gentlemen. It's trigger location. If price reaches resistance and the triggers remain above, you have to sit on your hands and do nothing. And if it reaches support or resistance here and the triggers remain below, just do nothing. That's it. That's your best option. Wait to see if it breaks. If it breaks, the triggers get below. It doesn't matter what color it is. And now it's go time. Let's look for rules to be met. Let's look for rules to be met. So I don't want you guys getting hung up on colors as much as trigger location. So I'm going to ask the room real quick. Guys, are we good with this? Price reaches an area, triggers remain below. Don't trade into that area. Price reaches an area, triggers remain above. Guys, let's not trade into that area. Let's sit on our hands and wait and see what the large crowd wants to do. If they break it, let's look for rules to be met until we reach the next line. And guys, this simple concept of letting the triggers tell you whether or not an area is broken or whether we need to pause, this is going to set you up for your second trade that I told you about, for that medium probability trade, guys. And this is when 50% of your trigger lines clear an area, but 50% do not. And guess what? We're not real original here. We call this a 50-50 trade. And guys, when half of my triggers break and half of them don't, as long as I have, let's use the call out button. As long as I have odds favorable momentum, guys, this area has the potential to break, but it's not broken until the triggers do. We call this 50-50 look a medium probability look. And there's going to be a lot of opportunities with this one. And honestly, most of your trades are probably going to be that 50-50 look. So understanding when it's a term or a clear path sets you up to be able to take this 50-50 look, to take advantage of areas that have the potential to break. And that will be the second trade that you're given. So no triggers through, no trades. Sit on your hands. Wait, let's see what happens. Small and large through, the area is broken. There's your clear path. Trade away until that next termination. And then guys, when the smalls break and the large don't, and you have that momentum, this area has the potential to break. But it is just the potential. Rule number 2 is not met. Rule number 2 is designed to keep you guys out of trouble. And there will be times when your path isn't clear for what seems like forever. It might be 15 minutes. But they're stacked a little bit. It's support after divergence low after support, guys. This is 90% of your day. And I like to stress that in the very beginning. This is 90% of your day. You spend a lot of time waiting, guys, and it's okay to do nothing. The futures markets trade billions of dollars every day. We're trying to capture a little piece of that. And $400 a day out of that billions is a 6-figure income, guys. And by the end of this classroom, you'll see that potential is pretty low to catch that. Or the potential is high, the figure is low. So learn to sit on your hands. Learn to do nothing. Because Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions. And very often, rule number 2 will keep you out of consolidation. It'll keep you out of chop. And that reminder, 90% of your day is really spent sitting on your hands and doing nothing. And I know that today, here's the NASDAQ. I want you to see this on my large chart on the NASDAQ. Rule 2 wasn't met. Rule 2 wasn't met. This one had the potential. Rule 2, Rule 2, Rule 2, Rule 2, Rule 2. Guys, this is like 8 instances where Rule 2 said, hey, don't take a trade, where you didn't have to give any money up, where there was no reason to hope that the market went. And eventually, all that support holds. It rockets off into the distance. And I know there were a lot of you that found long opportunities right up here once the path was clear. So weak triggers, reversal. Isn't that crazy? Potential to break and didn't. right into a divergence high and look at the untradeable bounce. And I know that that's going a little fast, guys, but I'm telling you right now, JK, Tracy, all you guys that are just learning this, focus on the momentum. Make sure that you understand that, and then learn to respect these areas on rule number 2, because those termination conditions are where the large crowd are making decisions. Those termination conditions are going to ruin your good time if you hope that they break, if you wish that they break. So is everybody good? Can you give me a Y in the room? Momentum leads the way. Strong triggers. Once you have it, you're going to look for that clear path. And guys, these two right here, I'm going to say it one more time. This is enough to create a solid plan. This is enough to create opportunity. But we're gonna tie it into the highest probability trend trade ever, guys. So once the first two rules are met, I go to my smaller chart, my faster chart, my refinement chart, and I'm gonna look for an entry, that point where the market is most likely to continue. But if I turn my attention to the smaller chart and I see this is the only termination condition that holds true on a small chart. The only time I will ever let the small chart talk me out of a high probability trend trade, guys. And that's 3 divergences in the same price range. It may terminate the trend. And then just once again, I want to go over what divergence is and what it means to us. So let me take that down. When price goes down, it creates a pivot and heads back up. That might be too thin, huh? If there's a loss of momentum at that pivot, right about the 3rd bar, we're going to know it, and you're going to see this cyan line, this light blue line. And all it says is that move may be losing momentum. And if you see it 3 times in the same price range, no more short trades. Or if you're in a short trade, it may be time to exit. So 3 divergences from a low or a high simply means that the market lost momentum 3 times in a row. Because there's 20 to 30 bars on this small chart, it's going to allow you to see some change that you won't see on that big slow chart. So 3 divergences in the same price range, rule number 2 is not met, guys. And it happens every now and then, and it's a great way to avoid losses. But if it's not there, we're going to use the small chart for entry. And we're going to be so precise. You're going to be so precise that you'll use a limit order. You'll literally be able to wait for the market to come to you. And you're going to wait in an area. Fibs, mid bands, or yellow 1-to-1s. On the large chart, those areas can create problems. On the small chart, these areas are where we're going to enter. They're going to create a bounce more often than not. But we want those areas to be inside of triggers. And more specifically, once again, new users, this is your best of the best. Favorable large triggers. When the large triggers and the synthetic triggers, those stepped looking triggers, are overlapping one on top of the other, like 2 snakes riding piggyback, we call this favorable large triggers. And we do this because one of the gospel truths that happen on any time frame, any market, any chart, is that price returns to large triggers, guys. So on the small chart, price may retrace back to the large triggers. On the large chart, price may retrace back to the large triggers. The synthetic triggers are the large chart large triggers, guys. So if there's areas inside of the large triggers, they may produce a bounce. If there's areas inside of the synthetic triggers, they may produce a bounce. So what we're going to do is you're going to create a window of opportunity. You're going to create an awareness of where the small crowd is most likely to fail. You're going to create this awareness of where the bounce in the direction of the overall trend is most likely to happen. And this is how you're going to define your entry for the highest probability trend trade. The first thing you're going to do is make sure that the rules are met on your large chart. Guys, you have to have odds favorable momentum. You want to have that clear path. And if you do, I'm going to take a lot of pictures today. I hope that's okay. If you have odds favorable momentum, if you have a clear path, guys, this is what your small chart's going to look like. It's going to be railing to the upside. And you're going to get this feeling that maybe it's going without you. You're going to have that fear of missing out. I'm sure we've all heard that phrase, right? This is where the FOMO kicks in. Oh no, they're going without me. What am I going to do? How am I going to get paid? And then this magical reversal bar happens. The small crowd shows up and they want to fight. And guys, this is a pattern that happens all day, every day. Once the reversal bar prints, that's not your entry. This is the beginning of the fight. So the first thing that I do is I look for those favorable large triggers, large and synthetic, overlapping, one on top of the other. And price is likely to return to these triggers, somewhere between the top and the bottom. But I don't expect triggers to create a bounce. They're just a moving average. I expect that the lines inside, the areas inside of the triggers, are the most likely spots for a bounce. So it might be the mid band inside of favorable large triggers that sends the market off to the north side, or it could even be these yellow 1-to-1s inside of favorable large triggers that create the bounce. So what you're doing each and every time you go through this process is you're creating a window, a range where the market is most likely to continue in the direction of the trend. But because of the momentum on the large chart, because there's nothing in the way on the large chart, your limit order goes just at the top of the window, at the highest point of support inside of favorable large triggers. And guys, if the small crowd has it in them to get to your entry, you are in the highest probability trend trade ever. But Mark, divergence printed on the small chart. You said that's a loss of momentum. It can be a termination. Absolutely not. One divergence on the small chart will never keep me out of a high probability trend trade. It takes 3. This little loss of momentum is exactly what we needed to get us back to the area inside of favorable large triggers. Some of you will say, but Mark, the small triggers turned against me. The colors don't match. Guys, momentum is defined on the large chart. This little loss of momentum is exactly what we needed to get us back to the area inside of favorable large triggers. So reversal bar signals the pullback. Identify your triggers, large and synthetic. Find the areas within. This is your window. This is your limit order. Anything on the wrong side of triggers, below the trigger lines, is what we call the wrong side of those triggers. And this is outside and not a part of the window of opportunity, not where we expect the market to bounce. This blue line beyond the triggers is where the market shouldn't go if this is going to be a successful trade. The beauty of futures, let's make it both ways. Reversal bar signals the beginning of the pullback, guys. It is not your entry. Once you get the reversal bar, identify your large and synthetic. Are they overlapping, one on top of the other? Are they favorable? If they are, look for the lines within. Fibs, mid-bands, yellow 1-to-1s. And guys, this is one of those magical unicorn moments where we have one line inside of favorable large triggers, a mid-band. You're going to activate a limit order a couple ticks below that mid-band and hope that the small crowd has it in them to give you a fill. Any line on the wrong side of the triggers, guys, the beyond the trigger lines, is outside of that window of opportunity. This is not where we want the market to go. This is actually where the market should not go. Is everybody cool with that? Give me a Y if you're with me. Reversal bar begins the process. Identify your triggers. Do we have some lines in there? These can create a bounce. Guys, let's enter. Anything on the wrong side. Does that make sense when I say the wrong side of the triggers? Above the trigger lines for a short, below the trigger lines for a long, guys, because once you get beyond those triggers, there is no telling whether the market's going to stop, where it may bounce, how far it may go. The advantage is lost for rule number 3. This is the best of the best. And once you identify where the market is most likely to continue, guys, this is how we're going to reduce risk. Your initial stop goes where the market shouldn't, 4 or 5 ticks beyond those trigger lines. And it's okay for your stop to get hit. Anything that wins 70 to 80% of the time, you are going to lose 20 to 30% of the time. It's a mathematical whatever. I can't think of a word right now. It's a must. It's an obligation. But because we can pinpoint with such accuracy, our losses can remain small. And guys, once you get a reversal bar in the direction of your trade, you can actually reduce risk a couple ticks above or a couple ticks below. And it doesn't guarantee a win, but if the market does turn, it provides a much smaller loss, guys. Losses are a normal part of a positive equity curve, and I don't want you to fear them. I want you to say, you know what, that one didn't work out, but it's cool because I had momentum and I had a clear path and I had that entry area and I put my stop where the market shouldn't go. And for every 10 of these trades you take, guys, you're going to lose 2 or 3. And that's the best of the best, guys. Areas inside of favorable large triggers is the easiest look. It's not the most common look. Favorable large triggers creates the least amount of indecision, guys. Favorable large triggers give you the smallest windows of opportunities, the least amount of space for those areas to be inside. The reality is very often you're going to get what we call split triggers. Split triggers, as long as you remember that price may return to the large or may return to the synthetic, really isn't that big of a deterrent for entries, guys, because you know that price may return here and it may return down here. It creates a pretty big look. And you know price may bounce here and it may bounce down here, and that's a pretty big look. So Tracy, great question. While you were typing it, we were going through it. So let me back it up. When they're separated a little bit, does everybody get the idea that price may return to the large triggers or the synthetic triggers? And you'll never know which is which, but that understanding sets you up. And then when you know that price may bounce off of a mid-band on its way to the synthetics, or it may bounce off an area inside of the synthetics, there's a little bit of indecision there, right? And since you know your stop has to go below the trigger lines, this could create an awful lot of risk. Is everybody with me so far? So Tracy, when they're a little split, when they're a little separated, one of the things that you can do to help out is you can insist on a reversal bar in the direction of your trade, because what it does is it establishes your risk. So if you're saying to yourself, it may bounce from the mid band, but it may bounce from the fib inside of the synthetic, I'm going to force the market to go in the direction of my trade. I'm going to force a reversal bar, and then I can put my stop 2 ticks below it. And now my risk isn't all the way down here below the triggers, but rather it's right here behind the bar that was headed in the direction. So this is one of the ways that you can kind of circumvent the indecision that split triggers. It doesn't guarantee a win, but it does reduce risk dramatically. And again, what is the best way? The best way is favorable large triggers. Guys, let's be realistic. I teach the best way to give you the highest chance of success. The reality is, more often than not, there's probably going to be some sort of split there. And if there's some sort of split there, it creates indecision. You know exactly where your stop goes. Some of you may not be okay with that level of risk. That's where the confirmation bar comes in. It gives you the opportunity to establish your risk once the market begins to move in the direction. And these are all things that you're going to have to practice, right? Tracy, did that make sense to you? That was perfect timing on the question. And we'll go through and we'll look at the live market and we'll find some examples and see if we can scroll back and see where it pays dividends. And I have a feeling that we're going to see some pictures in the room anyway. So the goal, guys, and that's it. That's the high probability trend trade. And you will. And you will, Tracy. I promise you. How many days are you with us here? I always feel like I'm behind the 8 ball when I come in after a week off because I'm not sure how long people have been here. It's the repetition that creates the recognition. It's seeing the same thing over and over. What it does is it almost slows down the market, Tracy. When I first started, and just a little heads up for you guys that are brand new here, I started almost 5 years ago with Nexgen. My older brother wrote the software, started almost 30 years ago. No worries. And guys, the market just, it ran. It was so fast. And I struggled to see the setups real time. Ooh, my mouse is going crazy. This is one of the ways you can slow it down, guys. This is a study tool. When your rules are met on the large chart, when you have that momentum, when you've got that clear path or that potential to break, remember I talked about these tails. We don't trade the tails. We trade pullbacks to areas inside of favorable large triggers, but you can start to create this recognition. Go circle a tail on the large chart, guys. This becomes a great study tool. And let me pull up my charts, and I'll show you exactly what I mean. And even when maybe it isn't the perfect look. This is the NASDAQ, but there's the potential to break. Odds favorable, coming from a termination. Not the best look, but there's those split triggers. And a reversal bar gets you into this down move. And down it goes. And I'm going to go to a market that's a little less erratic. Hey, good morning, Abdulaziz. Good to see you. So check this out, Tracy. We're coming from a termination, and it reverses the market. And we call that a strong bottom. And it creates odds favorable momentum. And I'm going to just go ahead and circle two tails on the way up. And I'm going to scroll back. And my first one comes right to support, right at the top of the window. And then my second one, 2 ticks above the mid band, right inside of favorable large triggers. 2 potential opportunities to take a long trade. So one of the things that you can do, and this is for you guys that are studying, go back and circle a tail. And if it hits an area inside of favorable large triggers, take that picture. And you know what? Let me take it with TechSmith Capture, because all of you have TechSmith Capture. And if you're brand new, this is how we have conversations, is not so much typing in the room, but rather typing on our chart. So I'm going to click this big capture button. And if I hover over just one chart, it only gives me one chart of information. So it's important that you click and drag and get both charts. And when you release, TechSmith Capture is going to give you these options. You can either take a picture or a video. Let's capture an image. And it's going to give you the image captured here. And the way we're going to talk, so Tracy, JK, anyone else that's in here, there's arrows and callouts and shapes. So the arrow, it's click and drag. Everything is click and drag. If I left click and bring it all the way down, I can move it all around until I release my mouse. And then once I release my mouse, I've got an arrow, and I can use this call out button and click and drag and create a little text box. And this is where I want to type something clever like, oops, my font color is white, and that's a bad choice. Let's make it black. This is where I'm going to put odds favorable momentum. I'm going to call it strong. I'm going to say rule 1 met. And what I'm doing is when I drop this in the room is I'm telling me, hey, Mark, check it out. This was my momentum. This was my best of the best. This is my strong triggers. The odds are favorable for the market to continue. Rule number 1 is met, and I have that understanding. And then I'm going to use an arrow, and I'm going to say something like price didn't reach the area. And I'll use that call out, and I'll say I had a clear path. Rule 2 met. Price didn't reach an area yet. And a lot of you are going to say, but Mark, it's only 2 ticks. It's so close to that area. Remember that we're trading pullbacks. Hey, good morning, Miss Cindy. And then I'm going to draw an arrow here, and I'm going to use the call out. And guys, this is where I think what you write on the chart is going to be the most advantageous for you. Price pulls back to support inside of triggers. Because what I'm doing is I'm reminding myself that not only do I want it to pull back, but I want it to pull back to an area. Not only do I want it to be an area, but I want that area to be inside of triggers. So now I've got strong triggers, I've got a clear path, I've got a pullback to support inside of favorable large triggers. Guys, I'm just going to click copy in the bottom right hand corner, and I'm going to paste it in the room, and I'm going to wait for feedback. And then I'm going to upload it. And when I upload it, it's going to give me a link to screencast. So now that picture's in the cloud. I can drop that picture in the room. But what I'm going to do with that screencast link is I'm going to open up my spreadsheet. And I'm going to go to my trade tracking. And I'm going to right click and I'm just going to paste that screencast link in there. And this is what I'm going to come back and study tomorrow to see what I did. But guys, screencast.com, all the letters and stuff, that's kind of crazy. I want it to be a little clear. I'm a little OCD. So I'm going to go to my Insert tab. And I'm going to click on Hyperlink right here, the link button. And it's going to let me create the hyperlink. So if I put that screencast link into the address, like you're going to google.com or something like that, up here, I'm going to put, I don't know, how about Rockstar Long? Don't miss this one. And then once I click OK, I know exactly what I'm coming to study. And over here, under feedback, I'm going to put perfect. You rule. Way to go. Children love you, right? Because this is the perfect trade. And you know it was the perfect trade because you got the feedback in class that absolutely the momentum was strong, that without a doubt the path was clear, and that your entry couldn't have been much better. And then maybe even you say, I took profits right at that big line that could stop the market. And guys, this is how you're going to get to where you're going to be. This is how learning to recognize advantages is going to come into play. Everything is going to be recognition. So one of the easiest ways to do it, and this is for you new guys, you didn't get this last week if you were here, is the Chart Reading 101. And I will give you all of this stuff, guys. And I designed this to help you recognize these advantages individually, because you're going to have to. And then you're going to piece them together to create a trade. And the fastest way to do this, guys, isn't by taking trades. And this always surprises people. Getting in and out of the market isn't the easiest way to learn how to read your indicators, but rather scrolling back, historical, taking 25 pictures of strong triggers and taking 25 pictures of weak triggers so that you always know the difference between the two. Taking 25 pictures of a clear path and also termination conditions so you never confuse the read, so you always know when your rules are met. But it's not enough to just take the picture, guys. Talk about the whys. Why is it strong triggers? What is the advantage? What rule does it pertain to? And the same is true. Why is it a termination condition? What rule isn't met? What is the disadvantage, guys? And that's where the second tab comes in. These are all strong triggers, annotated why. These are all weak triggers, annotated why. I've given you a huge head start. But if you go through and do this drill over the course of a week, you're going to be able to recognize momentum in a heartbeat. You're going to understand terminations without question. And you're going to be able to piece these looks together to create a trade. And to make sure that you're comfortable with these looks, I created this. This is the high probability trend trade checklist sheet, guys. And is the market coming from a strong top or bottom? That termination that reverses it. This is a picture. Not mandatory, but it creates the best case scenario. Here's the pictures of momentum and of weakness, so you can check yourself as you take the pictures. Termination, potential to break, clear path, defining your entry area, guys. All of this is on this sheet, and then the second page is a checklist. So when you're looking to get into the market, not only do you have a checklist on what it takes to get that high probability trend trade, but you have the words to write on every chart that you take a picture of. Odds favorable, terminations, areas inside of favorable large triggers. Now, I'm going to let you in on a little secret. I've never had anybody follow this checklist to the letter truthfully and do worse than 70%. And guys, the goal is to win more than we lose. And the high probability trend trade is your first step in that direction. So I'm also going to give you this, the KISS plan, the Keep It Simple Sunshine plan. Guys, this is a stepping stone in your learning journey. This high probability trend trade is the first trade, not the only trade. But this plan is designed to optimize your chances of success with that trade. And then through simulation, study, class feedback, underlined class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, when you can read your indicators, When you can recognize those first two very simple advantages, you're going to be able to see more. You're going to find more opportunities. You're going to be able to manage more aggressively. But in the beginning, we're going to focus on the best of the best. We're going to build some confidence and try and get the highest win rate that we can. And your simple plan for consistency, don't fight the large chart. I can't stress this enough, guys. Do not fight the large chart. This is how you commit financial suicide. Trading against strong triggers. Guys, the large crowd, the big crowd, the people in charge, they establish that momentum. There's no reason to try to fight it. And then trading into termination conditions. And this is a little tongue-in-cheek book, right? Trading into termination conditions. Trading into areas that may stop the market, guys. Those are going to kill your chances of winning more often than they don't. Define your entry. And I was very specific on bold letters and highlighted. Guys, make it your entry. One of the things that's going to happen in this room is you're going to see people that are someplace you're not, that are ahead of you, that have been here for a year, 2 years, that have been studying every day, that have done their homework, and they're going to take trades that aren't high probability trend trades. You're going to see that in the room. Focus on your entry. Focus on defining where the market is most likely to continue, entering the market at that best of the best spot. And let's do one more. We're going to define our entry. And we're going to do that by letting the rules be met on the large chart. And then once they're met on the large chart, waiting for the reversal bar, not just jumping in hoping. You may do that later, but in the beginning, we're going to wait for the reversal bar to signal the pullback. And once you get the reversal bar, your job, and this is on the spreadsheet, guys, is to identify your trigger lines from the lowest point of the triggers to the highest point of the triggers. This is where the market is likely to return. But this isn't necessarily where the market is most likely to continue. So once you find your triggers, and Tracy, this will happen in a matter of seconds with just a little bit of study, you're going to define your window of opportunity, the point where the market is most likely to bounce in the direction of the trend. It can be Fibonacci resistance, magenta midbands, yellow 1-to-1s, but your window is from the closest resistance to the furthest resistance from the reversal bar. This is where the market's most likely to continue to bounce. So you're going to activate a limit order just below the lowest point of resistance, and you are going to hope and pray that the small crowd has them in it. And if they do, ladies and gentlemen, you will be in the highest probability trend trade possible. This is your entry for the high probability trend trade. And once you can find this entry, you know where your stop shouldn't go. Your stop should not go beyond those trigger lines, 4 or 5 ticks, guys. And then that sets you up for management. Now that you're in the trade, now you're going to pucker a little bit. Now that heart rate's going to go up. Your palms are going to get even sweatier because your brain is going to tell you that you have something to lose. And guys, you're on simulator. Let this play out. Let it be very, very mechanical in management in the beginning while you learn to trust the large chart, while you learn to believe in momentum. And you will craft a plan tailored to your personal goals based on your experience reading the indicators. That clever way of saying, once you can read your charts, you will manage differently. But in the beginning, let it be super mechanical. And your initial stop is 5 ticks outside of those triggers where the market shouldn't go. And you won't touch it. You'll either get stopped out of that trade, and that's okay. It's a normal part of a positive equity curve. Or you're going to get the reversal bar in the direction of your trade. And if you get a reversal bar in the direction of your trade, then you will move your stop 2 ticks above it. Your management in the beginning should be if-then. Eliminate emotion, eliminate opinion, eliminate fear. If I get a reversal bar, then my new stop is 2 ticks above it. And there's nothing to do. I'm either going to get stopped out or it's going to hit my first target, guys. I will never be in control of what happens. I never expect a winner. I expect more winners than losers over the course of 10, 20, 30 trades. So if I don't get stopped out, well then it went to my first target. And in the KISS plan, your first target is only $100 away from your entry. with all that momentum, with a path that is clear, it's really not too difficult to hit $100. And once you hit it, the sweat from your palms starts to evaporate. It starts to go away. The butterflies in your stomach aren't messing with you so much. That pleat that you just sucked into your leather chair is starting to relax, guys. And you're going to move your stop to break even. You're going to have nothing to lose. And you've already been paid. And I'm going to tell you, this is not the best stop. But this is the stop that's going to remind you that the large chart led the way, that the large chart momentum and clear path is the only reason you're in this trade. And it's going to make it easier for you to hold for the second target, guys. You're either going to get stopped out, break even, or it's going to go to your second target. And if it goes to your second target, this is the cool thing. You're going to exit. No matter what happens next, you're already out of the trade. And at $200 away from your target on 2 contracts, that's a $300 trade. That is $300 in your account, $300 in your pocket, $300 worth of confidence. And a lot of people come thinking, well, I need to make $10,000 a day or it's not worth my time. To which I lovingly reply, bull poop. $300 a day, guys, if that's the best that you do, is a $75,000 year. Add $100 to it. You're in 6 figures, guys. You're going to see the potential. If you really do the work and study, you're going to see the potential to be in this range. Pretty simply every day. $500 to $1,000 is not unrealistic if you're following rules. $500 to $1,000 is not unrealistic if you have a solid plan, guys. 2 high probability trend trades that go the distance, $151,000 a year, if that's the best you can do based on 250 trading days. So that's why we focus on the best of the best in the beginning. That's why as a brand new user, I encourage you, learn how to get paid. Learn how to take profits. Learn how to trust the large chart. And then once you practice, once you begin to get these repetitions, you're going to want to test your plan. You're going to want to go live. And there's 2 things that you have to know before you get outside of that simulator. You have to know why you will enter a trade. Those are your rules for entries. And you have to know why you're going to exit. That's your management. You have to have both sides of the coin, guys. And you have to commit to having rules met. Because the rules are based on patterns that have been proven to win more than they lose. We're not trading gut feelings or news releases, guys. We're literally trading patterns that if you go back and take 1,000 pictures have been proven to win 700 to 800 times. And the more consistent in action you can become, the more consistent in profits you'll likely become. And your process yields the results. And this is so important, guys. It's not your desire to win that creates profits. It's the process. It's the execution of the method. And your rules help remove the emotion associated with trading, because once you study enough to believe that the high probability trend trade wins more than it loses, then you don't care about the result, because you know that if you take 10 of them, you're likely to win 7 or 8 of them. And you don't worry about the end game, but rather you focus more on the entries. And this sheet is designed just, if you're in a high probability trend trade, what's it going to take to get you out of that trade? Well, initially it's the KISS plan, taking the emotion out, learning how to do it. And then you'll begin to find options as your chart reading grows. And then when you add that second trade, the 50-50 trade, it has a different set of entry rules and it has a different set of management. And the more trades you add, the more you have to be comfortable with. So keep it very simple in the beginning. Keep it very focused in the beginning. Learn how to get paid in the beginning. So I'm going to give you all of these real quick, guys. I'm going to drop my spreadsheet in the room one more time. And then I'm also going to give you Chart Reading 101, which is designed to help you learn to read your indicators. And of course, all the pictures you take, if you need feedback, put them in the room. I'm going to give you the KISS plan. I'm going to give you those high probability trend trade checklists. I'm going to give you that daily goal sheet that reminds you that it's important to get paid. That's the goal, is to make money. And I'm also going to give you my PowerPoint in PDF form so that you have access to every picture that I present in the room. So when I told you at the beginning, hey guys, I'm going to give you everything that you need to be successful, I'm going to give you everything you need to recognize advantages, everything that you need to study. Guys, you have it. The only thing that I haven't given you is repetition. The only thing that I have not provided is experience. Look at rule number 2. 1, 2, 3, 4 times. There was no reason to go short. 4 times. You didn't have to lose a trade, guys. Are there any questions about the high probability trend trade? And just a heads up on this section, there was your management, very mechanical, the pictures. There's with those entries. Are there any questions about momentum? Let's do a live read, guys. Are my small triggers above the large? Are they wide? Are they angled in the direction of the trend? Is rule number 1 met on this S&P chart? What do you think? You're absolutely right, Tracy. They are not. Not yet. This is the NASDAQ. The smalls have worked their way inside. Let's go to the most current bar. Do I have odds favorable momentum? Smalls above the large, larger wide, space between the two. Do you see it, Tracy? Do you see it, JK? In the moment. And look what the market's doing. Egads and little fishes. Let's circle a tail, guys. How do we feel about support inside of favorable large triggers? This is your pattern. This is what you're studying. There's that potential to break, and sure enough, it hasn't broken yet. Gosh, I love it when it sets up live. I love it when it gives us that best of the best look while we're looking at it live. Because guys, I don't have to make this stuff up. It happens. And the great thing is, once you learn that high probability trend trade, it opens the door for the 50-50. Guys, this is on the KISS plan. And you need a strong top or bottom for this one. And you need odds favorable momentum. But what the KISS plan says is that divergence is likely to kill that trade, and we're optimizing our chances of success. And it reminds you that divergence kills that trade, and it tells you again if divergence prints, exit that trade, and I want you to see divergence on the potential to break, and look at the missed loser. Guys, you have everything that you need to be successful. The only thing that I need you to do is study, practice, and ask for feedback. And it did go right to resistance, guys. And right now, we need that NASDAQ to break out of a range. Rule number 2 is to find it. I'm going to go take 5 minutes. And you'll find that I do this every day. I firmly believe that you've got to walk away every now and then. You've got to stand up, go breathe, do something, refill your water. One thing I want you guys to do while I'm gone, new users. So Tracy, JK, do me a favor. Open up your TechSmith Capture. Go to that search bar and find it and take a picture for me. Click that big red button and just click and drag on your charts. If your charts aren't open, click and drag on a picture of your dog. One of my favorite things to see are your pets. So I want to make sure that you can post a picture. And if you need another tutorial, I'm glad to do it. But I will be back in 5 minutes, ladies and gentlemen. When I get back, we're going to start looking at the live market. We're going to look at the charts that you posted. But most importantly, the second half of class is a discussion, ladies and gentlemen. Don't force me to keep flapping my gums. Ask me questions. I don't care what it's about. If it has to do with something that John Novak taught last week, post it in the room. Let's talk about it. If you're learning to trade the NASDAQ and you have questions, post in the room. Let's talk about it. If you're like, Mark, this termination thing, I just don't get it. Say it. Let me get you that information. But I will see you guys in 5 minutes. Go stretch your legs, guys. to it. JK, thank you for saying that. You guys see how rule number 2 kept us out? This is one of the things that I want you guys to recognize. Directly into resistance, guys. Just no reason to take the trade. And look at how far it pushed down. And then no reason to go short directly into support. We've defined the areas. JK, were you able to find Tech Smith Capture? If you go to your search bar and type in tech. Nope. Then let's do this. Bum, bum, bum. I'm going to go to, and hopefully I can find it quickly because they changed it. Just to make sure that, that you guys have what you need. I'm going to go to the software guide and screen capture programs. And here is the link to it, JK. Let me get that in the room for you. It's literally about a 2-minute download to have everything up and running. You may need to create a Snagit account. It's absolutely free, but that's what gives you, not a Snagit, screen capture account. You don't have to do it now. If you want to do it this afternoon, we can go through it tomorrow. Whatever works for you. And then I want to give you that same link here, though. This actually is a tutorial on how to do it. How to take those pictures, how to drop them in the room, all that good stuff. So then if you need any help, just let me know. I'm so happy to help. So guys, the second half of class here is we're going to start looking at the pictures you guys posted. So I'm going to come up to the beginning of the day and scroll back and forth and see what's going on in the wonderful world of Nexgen users. And Joel got us on the 6th. Looks like he was doing a little market replay over the weekend. Odds favorable momentum. And he says, hey, there's no clear path because of that divergence high. It's only the potential to break. And notice that he references the scissors, open like scissors. I know that it's strong. And when it pulls back, this is pretty cool. So watch this one. He takes the pullback. Does everybody see the split triggers here? It might go to the large and it may go to the synthetic. And guys, sure enough, it goes to the synthetic, but Joel understands completely that if he enters at the high point, his stop goes below the triggers and it keeps him in the trade and he's able to capitalize and get paid with that momentum. Great job, Joel, if you're in here. I'm not sure if he's in here. But outstanding. But this is a great example of once you know that it could go to either, stop placement isn't that difficult. Nicely done. I like that. And guys, I want to remind you, if you have any questions about somebody else's pictures, just post them in the room. It may not be your trade yet, but it might be your trade eventually. And of course, if you've never seen a moose in real life, those things are huge. Holy smokes. All right, Gary. I don't know what a soft bottom pivot is, but there's definitely divergence. Gary, I think that the most important thing here, your trigger lines don't break it through, which means that it's good. It's a termination. And then you get multiple divergences off of the termination. And then, guys, this white bar is a trade that John Novak teaches. And it requires another chart. But when you have a termination and you get a white bar off of that termination condition, it creates an opportunity. And that's exactly what Gary capitalized on there. Gary, you did it beautifully. Nicely done. And then Pete, termination, odds favorable, little aggressive on your entry, could have picked up an extra 8 ticks if you entered where you were supposed to. And then out at the fib, 31 ticks. Absolutely. And guys, I think this may be the one that we circled earlier. And sure enough, Pete caught it. And once you get comfortable, so Pete, The one thing that you didn't have here was that clear path with the divergence high. And guys, there's people in here that have great plans. But one of the things for me, Pete, is clear path on both charts if I'm going to take that jump in like that. Otherwise, I'm just waiting for the pullback. Great job, though, and great hold. Momentum for the win, right? All the way up to the fib. Remember when I said you guys would be able to understand where the market is likely to go? Pete got out 2 ticks below it. Nicely done. It's Monday. You missed me, so you were probably so sad it's hard to think straight. It's a great trade, Pete. And your understanding makes it easy to hold this trade because it just becomes a trend trade. There are not a lot of pictures in this room, guys. You're going to have to keep me busy with questions. All right, Pete, took your profits. Large chart got ugly, no momentum, kind of a mess. Some of the best pictures you guys can take. Kurt, exactly. When the large chart's ugly, guys, don't let the small chart talk you into something, right? Start to lose momentum, big bounces, no clear path. And sometimes the easiest way to make money, this is one of the things that I've found over the years. One of the easiest ways to make money is to not give it away when the rules aren't met, is to not take trades hoping that a red line breaks, right? To not go short because the market has to go down from a termination, but rather being very adamant on the idea that the only thing that's going to get me into a trade is if I have momentum, if I have a clear path, and if I have an entry area. And the difference between successful traders and the not so successful traders are the ones that can do absolutely nothing when there's nothing to do. And then Pete said it. And man, Pete, I hope people start listening to you. Focus on the large chart. Focus on the big chart, the slow chart. Focus on these guys. Let it define direction, momentum, terminations. And then and only then, get over to that smaller, faster chart. And I think Pete's the one that says it, and I agree 100%, is if the large chart rules aren't met, why on earth are you even looking at a small chart, right? Weak triggers, right at resistance. Does everybody see it? Termination condition without momentum. The first 2 advantages are gone. Tracy, do you see it? JK? Can you see how in the moment, as much as we wish we could be in a trade, I'm missing 2/3 of my advantages. So I just simply choose to do nothing. And then if I go to the NASDAQ, I do have momentum, but I don't have a clear path. Which means that I'm probably sitting on my hands and being a little patient. And then I do have a little bit of momentum, and here's a great lesson. Let me take a picture. So for you new folks, this is what we call the gap theory. And I'm going to create a little chat box here. Whoops. But what this tells me is I do have a termination condition, without a doubt. But the gap theory says that when price accelerates away from the large triggers and hits an area, it's likely to return to the large triggers if they are a full bar away. And this is also what lets us know that the midband is a termination condition. So when price accelerates away from these large triggers and we hit the midband, we hit a fib, we hit the divergence high, does everybody see how the large triggers are below this yellow line? And this yellow line is what we call a reversal bar marker. And a reversal bar marker shows me the exact price where this becomes a down bar. And then there's still room to the large triggers. This is what we call the gap theory. Price is more likely to close the gap than it is to continue up. So If you were thinking, man, I'm going to go long because it looks like momentum, the gap theory says, hey, pump the brakes and wait a second and let's clear the area and let's let those large triggers catch up before we try to take that shot. And we'll see if the gap theory comes into play. And guys, just a little reminder, the NASDAQ, look at that, support held, resistance held. The NASDAQ is not a normal market, and it trades about 10 times faster than any other market. And it requires you to be sure that the large chart rules are met. And then there's little differences on the smaller, faster chart. But guys, we're right back into these key areas without momentum. And we just have to pause, have to pump the brakes, sit still for a minute, and we're going to wait and see what happens. 90% of your day. And this is one of the reasons you new folks are going to say, Mark, can you take trades live in class for us? Can you trade live? We really just need to see you trading live. Well, you don't. Because 90% of my day is spent waiting. You're not going to become a better golfer if you watch Tiger Woods go out and golf or Scotty Scheffler, right? You're not going to become better at tennis watching Serena Williams beat up on people. You're not going to be better at basketball watching old Michael Jordan tapes. You're going to get there from practice. Andy, odds favorable, potential to break. You're in at support inside of triggers, and you make money all the way up. Are you guys digging John Novak's new overlays? Some people like them, some people don't. They're a little busy for me. Nice trade. Does everybody see it? Momentum, potential to break. He gets in right at the area inside of triggers. Great stop placement. He's able to hang on for profits. Andy, nice job, bud. All right, I'm on my last picture. Starting on the left, everything says down. You go short, you get paid. And then it stops you out. And then you're going short. Termination. Triggers roll. Trying to figure out where you did all this. This is where rules help me out a lot. So I'm trying to see exactly what went on. I see one short right here with the odds favorable and the clear path. And then it looks like an add-on. Possibly you got stopped out of the short. And then once the triggers roll, it's a little bit easier. And I'm not sure what that did, Abdulaziz. I love the first short. It's easy with momentum and a clear path. The second short, one of the things is when these large triggers are up and the small triggers haven't gotten below Abdulaziz, definitely less likely to work. This one is a good shot. It came right up to the trigger lines here. I think they just got caught in a little Monday indecision there, Abdulaziz. I love this one. I think this one is maybe just a little bit early because of the strength of the large triggers up. And that one just didn't work. Divergence, divergence. There was two divergences. It's just a tough look. We got scrambled a little bit. Monday morning, Abdulaziz. Monday morning. That's all right. Good job. And then Ron, check it out. 4 lot. Everything says up. Giddy up. Boom, boom, boom. Goals met. Andy says, I'm not going to be a nurse this time next year. Well, you will be. You just won't be practicing. Milton is a category 5. Yeah. Guys, keep John Novak in your thoughts. He's right in the path. And Helene did 7.5 feet of surge, and it almost got him. This one has the potential to absolutely drown his house. Big dog, you too, man. Yeah, he's right. Have you met John? He's right on the bay into Siesta Key. So the last one, okay, cool. Last one flipped his boat. So, yeah, we're rooting for him there. And guys, that's actually everything that I have. And it sure came close, but not quite on those large triggers. Termination, man, just waiting. Guys, one of the hardest days to teach are days when you guys don't post. So this is a great opportunity for you guys to ask questions if you have them. This is a great opportunity. Do we have NASDAQ traders that need help NASDAQ trading? There's S&P. Cool. So guys, first and foremost, here, let me capture this picture real quick. I'm going to show you something. You're respecting your rules? No, I love it. Guys, NASDAQ is fast. NASDAQ is about 10 times faster than the average market. So much so that your large chart is a 34. Your small chart is a 13, which means that it's the exact same size as the large chart on any other market. So guys, let me give you my 2 cents on trading the NASDAQ. And I'm talking about trend trading, guys. I'm talking about trend trading. When I have odds favorable momentum, when my path is clear, when the large chart rules are met, and I can't stress that enough, guys. When the large chart rules are met, there's 2 looks on trading the NASDAQ for entry. And my entry timing is 100% dependent on the relationship of those small triggers to the reversal bar marker. So for you guys that aren't comfortable with the reversal bar marker, once again, let's just go to the rules. So a reversal bar marker is the exact point where the reversal bar happens. Yep, I'm talking NASDAQ right now, Gary. And Gary, I think you have a different plan on NASDAQ than what I'm talking about. This is for high probability trend trades, ladies and gentlemen. This is only for high probability trend trades. So when I'm a NASDAQ trader and I'm thinking that I want to go long, right? And I'm looking at my large chart and let's just pretend that the large chart rules are done. When price reaches my entry area, guys, I'm looking at the relationship of those trigger lines when it reaches my area. So again, large chart rules met 100%. That's the key. If I get to my area inside of favorable large triggers and my small triggers are less than a full bar away, what does that mean? That means that my small triggers are straddling the reversal bar marker, are below the reversal bar marker. Can you guys give me a why, NASDAQ traders, if you're with me on that one? If my small triggers are below or straddling the reversal bar marker, my rules say sit tight and wait for a reversal bar. Because what happens, guys, is these small triggers will behave as resistance. Remember, this is a 13.2, not a 5.1. And that's a lot of strength down. So when they're there, I need a close, forgive me, a close on the correct side of the small triggers. Does that make sense, everybody? Not a reversal bar, but a close on the correct side of the small triggers. And let me show you, I think I took one this morning playing around. Let's see if I can find it. Here's this one right here. Let me make it easier to see. And I got out because of a third divergence on this one, but this is a great example. Large chart rules are met, but my small triggers are so close that I sit on my hands. And look, it keeps me from getting run over. And then once I get a close on the correct side, it's pretty easy to get into this trade. And guys, not fighting these small triggers, you NASDAQ traders, pays huge dividends. Waiting for the close on the correct side. And then the other side of that, that's it. So entry, it's a stop in at the reversal bar marker, 100%. Abdulaziz, absolutely. I'll have a buy stop right at the reversal bar marker. And what that does is it keeps me from hoping it's a reversal bar. Have you guys ever seen like this bar right here? And you're like, oh, it's going to be a reversal bar. And you get in at the very top and then it goes down anyway. So a buy stop right on the reversal bar marker gets you into the market and it insists on a close on the correct side of the triggers. Does that make sense, Jen? When my rules aren't met, Abdulaziz, that's the easiest answer. I've got my window of opportunity. I want to see that close on the correct side at that one. Go watch the car rust, Ron. Have a good one, man. So I want to see that close on the correct side, really at those areas that I'm anticipating holding, Abdulaziz. And then the second entry is if I get back to my area inside of triggers, guys, and those small triggers are a full bar away, if they're above the reversal bar marker, guys, I'm in at the area because it gives me reaction time. It gives me established risk, virtually no risk at the area. And then if those do hold, I've probably already been paid. And this is NASDAQ specific, guys. So let's go back and see if we can, woo. He better show you the exact thing. I taught him that. Not really. He probably taught me that. So just for grins, I'm going to circle that one, guys, and we're going to go back to 10:08. Actually, you know what? This is even better for you guys. If you thought you were going long, look at the small triggers, and it just doesn't go up until you get a close on the correct side. The same is true right here. If you thought you were going to go long here, waiting for a close gets you in on the correct side. If you thought you were going to go long here, no reverse, no close on the correct side, keeps you out of the losing trade. So there's actually a lot of opportunities there. But let's see if we can find that circle and see what it looked like. Bum, bum, bum. So it pulls back to the mid-band inside of triggers. Does everybody see how the small triggers didn't follow? You're in at the area, guys. And look at it. Beautiful. If you waited for the close on the correct side, look at how much you gave up. So there's a great example of it right there, where the smalls are a full bar away. Use the areas. Use the areas. And then here, instead of getting in right at the fib, because the smalls are close, the close on the correct side, it's a little more risk, but it keeps you in that trade and pulls you for the winner. But this is NASDAQ specific, and it's important that you guys understand that. On crude oil, on the S&P, guys, this is only a 5-1. Like, this is your small chart on the NASDAQ. This is tiny. Look at the split triggers. And it comes right back to the synthetics, guys. Does everybody see that? This is why with split triggers, a reversal bar creates an advantage. I love this stuff. This is so much fun. So let's look at it now. I've got odds favorable momentum. I have the potential to break. I've got a mid band here and I've got a fib down here. What do you guys think? Potential to break. There's the top of my triggers. There's the bottom of my triggers. That's huge. It's a 50-50. Where's my highest point of support? Right there. Where's my lowest point of support? Right there. Does anyone feel good about $180, $200 worth of risk on a medium probability trade from a bad bottom? We're at the first area. Some people might wait for the reversal bar. Whoop. That was quick, wasn't it? It's still 50-50, divergence. Still have a big window of opportunity. And this is where understanding where stop placement goes gives you the ability to say whether or not you're willing to give that risk on a medium probability. On high probability, all day long. On medium probability, with a loss of momentum, guys, that's just not my trade, and I'm okay with that. I'm okay not taking a trade that doesn't fit my plan. And it may go. Waiting for the large triggers to get above the fib. And we'll see what happens. There's odds favorable. It's pushing, right? Jeffrey Dean, you want a clear path, you said. Right now we have the potential to break. We've got the best momentum ever. And I've got the smallest window of opportunity. Can I put a limit order right here, understanding that if I'm in there, my risk is about right there, give or take. So you get to make the decisions. Oh my gosh, and now everything keeps going up, right? And now the mid band is my lowest, but look at the window of opportunity now, guys. It's literally 2 lines wide. So now we're just hoping, can the small crowd give us a push? I've still got my momentum. I have room to my profit targets. If I get a reversal bar, I have a high point of support. Let's do the trigger lines. From the top of the triggers to the bottom of the triggers. From the highest point of support to the lowest point of support. And now all of my areas are on the wrong side of the triggers. And this is a great example of it's not always going to be my money. And people are like, but Mark, how did I enter if my rules weren't met? Well, you don't. And I know that that's kind of a bummer, but that's it. What do you guys want to talk about? I'll show you some stuff, I guess. I'm going to do this one because I think this is an important thing to hear over and over and over, guys. To minimize your learning curve, post pictures of your trades in every class. Every trade, win, lose, or draw, guys. And if you win and the rules are wrong, you might have a short-term victory, but a long-term failure. How are you going to know the difference? To be sure, you need feedback from us. We're here to help. If you place a trade on the simulator, participate in class, there's no risk of loss or capital. You just need someone to tell you what you did right or wrong, and that's really the educational thing. And that's what we do every day. So Tracy, you're not going to be a professional trader in your 7-day demo, but what you will know is that it works. And you'll know how we teach and that the education is available and that there's opportunity to grow every day. And that's really my goal, is I want you to see how we teach. And you will get the best education by posting the most. Belt, you don't get to beta test before I do, man. But I have a feeling that absolutely John Novak is probably going to put it in a couple hands when it's ready. I get to beta test when it's ready. So actually, I don't know if you guys are going to get to beta test it or not, because he's going to refuse to release it until we've beat the ever-loving snot out of it and it's right. But he's got multiple programmers working on it, and he's unwilling to release it until it's perfect. Again, Bell, I don't know. I haven't seen it. It's still in the workshop, right? The car is still up on the lift, and you're asking me if it goes 0 to 60 in under 3 seconds. I don't know yet. If I had to make a guess, I would say that it probably will, but it's just not ready yet. But it will be. I can't wait. All right, Jeffrey Dean. Everything says up with momentum. You jumped in, no room, got out break even, spend some commissions. And then once you get to the other side of it, Jeffrey, notice how effortless it is? And this is what I want you to notice, guys. Trading into trouble. Oh no, you caught the first one. Waited for the reversal bar, split triggers. Oh, Jeffrey. That was it, right? Split triggers, reversal bar, holy smokes. You tried to add a few, get out 4, get to the other side of trouble, and then it becomes easy. I would say that these entries are the only ones that I'm not on board with, because you're right into a bounce point. But great job, great patience here. Everything says up, and you just go up with it. Yeah, it's hard to wait for a couple hours and then do it. All right, triggers broke, but no pullback. And yeah, they head faked you, Tracy. You're looking for the mid bands. I love it. You're looking for the areas. So there's your first reversal bar right there. That's the first one. This one just didn't get you. But Tracy, one of the things that you're going to be able to do once you get a little more comfortable is when you've got odds favorable, when the path is clear, and you'll probably see it in this room, there's people that jump in right on the other side of trouble and ride all that momentum and get paid. And you can see that Jeffrey did it here. Jeffrey never really got a solid pullback, but with momentum and a clear path on both chart, he was able to just jump in and capitalize. Does that make sense, Tracy? And that's kind of a down the road trade. But once you recognize momentum and a clear path and you absolutely nailed it, right? You're going to find more ways to capitalize. You're going to find more ways to make money. And I'm a huge fan of that trade. I grabbed one this morning. Exact same look, Tracy, that you had. And what I did is I let it clear the line on my small chart, and I got paid at the fib down here, and it was a pretty easy trade. And they're quicker, they're faster, they're smaller profits. I only made like $225 on this trade, but that was $225 in like 8 seconds. So that is exactly what you just showed me, and just showing you another potential entry that you'll be picking up on pretty quick. There's no doubt in my mind. And then Zorro. Everything says down. You get in off the reversal bar from the synthetics. Split triggers, reversal bar, beautiful entry. Correct side of the small triggers, everybody. Do you see it? If he gets in early, it pushes up. Gets in on the correct side, just like the lesson that we talked about. And sure enough, down it goes. Beautiful trade, Zorro. Really nice. And guys, that's the NASDAQ. That little bit of patience. Get to the right side of the small triggers. Makes it easier. Or if you have areas and they're full bar away, use the areas. Nicely done, Zorro. All right. I guess we'll see what the live market's doing. The S&P... Rule 2 will help define areas of consolidation. Hey, JK. It also defines the areas we want to see break before resuming our trading. And this is kind of a cool thing, guys. This is the large crowd. Up, down. We don't have to try to be first. You just don't. This is Norbert. Norbert is the large crowd, the big chart. This is the big money investor, guys. This is the guy that creates momentum, that establishes trends. This is the one that'll eat you if you fight him. Guys, is everybody familiar with remoras? Do they have remoras in your neck of the woods? Or do you remember it from biology? They just cruise. And then when this guy kills, they eat. And that's kind of what we're doing, guys. We're not bottom feeders. We're just opportunists. We let the large crowd push. We let them get beyond the areas where they're making decisions. And then once they do, we'll find a way to capitalize. We'll make a little money here and there. Nothing to do on the S&P, guys. NASDAQ went from termination to termination. What a great visual of how powerful Fibonacci can be. Straight from resistance all the way to support. And it's this resistance that appears to be creating a little bit of a bounce. And now we'll just see what happens. Weaker triggers, two divergences, right off the mid-band of the triggers, but do you see how we're losing momentum? And momentum is likely to push the market in the direction of the trend. So it stands to reason that a loss of momentum, the market may struggle pushing in the direction of a trend. What would you guys like to talk about? You just tried to pause the NASDAQ? I've done that. I've got two different mind frames when I do market replay. One of them is hurry up and find a trade, and I miss every trade because I fast forward. And then the other one is just the relaxed. There's nothing worse, especially on the NASDAQ. If you fast forward, it's kind of hard. So let's see, what can we talk about? You guys are going to force me into doing stuff. Let me open this one. Mark Douglas, guys. If you've never looked at him, go Google him on YouTube. The late Mark Douglas. John Novak and Mr. Douglas had a relationship. They talked very often for over the course of a year. And one of the things that he talks about is that it's the execution of the method that you should be looking at as a trader. And when you believe you know what's going to happen, you set yourself up for failure. One of the things that I'm absolutely sure of, guys, is I will never know what the market's going to do. I'll never know if I'm going to win a trade, and I never know if I'm going to lose a trade. So if I create the expectation that a trade should win, well, then I'm setting myself up for failure. I'm setting myself up for anger, for sadness. And when you believe that you don't know what's going to happen, it's pretty easy. The trade doesn't matter. It's a collection of trades. And then you focus on the execution, guys. And where's the one that I really wanted to do? Your rules eliminate the need to know what's going to happen next. And that's why I focus on rules a lot, especially for you newer guys that are in here. You're going to hear me all the time. Were the rules met? Did you have the advantages? Were the rules met? Because we know that the rules have been proven to win more than they lose, which means that it doesn't matter what happens next. And Mr. Douglas has a thing where he talks about if you had a coin and you flip a coin, and it's always a 50-50 chance of wins or losses, right? So you may bet heads or tails, but really you never know. But if you can create an advantage, if you can weigh one side of that coin so that you always know that heads is a more likely option, so that you know that maybe 7 out of 10 times it's going to be heads, and you validate it and you verify it and you back test it, Is there ever any reason to bet tails? And I think human nature says, well, yeah, because it's going to be tails 3 times out of the 10. Let me hope that I can catch those 3 times. But the reality is the smart investor is going to bet heads 10 out of 10 times with the understanding that 3 times he's going to lose. And he becomes okay with that because it's more wins than losses. Does that make sense? I'll never know what the market's going to do, but I know that with weak triggers and with no areas inside of triggers, I've given up 66% of my advantages, and therefore I choose not to enter this trade. I'm not going to bet on tails. Pete, everything says up. You go long directly into one-to-ones for the second time today, and it bounces right back to your area. But you still hold on because of your understanding. 2 for 2, Pete. It's Monday. It is. It's definitely Monday. But odds favorable in a clear path. I dig it. Works, guys. Learn those first 2 advantages. All right, I'm going to take 5 minutes. You guys watch a market bounce around. Let my dog out. Look at that. Thank you, rules. And this is crude oil. Crude oil's cranking. Guys, I'll see you in 5 minutes. If you have a question, post it in the room. If you have a picture, post it in the room. If there is something specific that you would like to talk about, post it in the room. Nothing is ever off limits here, guys, except personal accounts and politics and religion. I'll see you in 5. You can always ask me a question. And Kurt, what do you learn losing $1 million? Oh, absolutely. And guys, there's a lot of great stuff out there. Do I take white paint bar NASDAQ question, and how? I don't. I don't even have a NASDAQ market flow chart built, Abdulaziz, but I understand the trade, and I could certainly look at that. There's the area the small triggers were a full bar away. I'll be darned. So that trade, Abdulaziz, did everybody see it? It happened fast. Let me see. I believe there is off of no, there's not. Hold on one second. We're gonna find it. This is your video, Abdulaziz, but let me show you. Let me build a chart. Well, it starts, I mean, it doesn't matter if I take it. That's the beauty of it. Let me build a market flow chart real quick. Let's talk about it. I'm almost there. 21 range. Too fast trigger lines, 21 range. All right, so I've got this coming up right now. And it'll take just a second. There's a lot of data. Jen, were you fast enough to catch that short? You NASDAQ traders, anybody get in at the area because the small triggers were a full bar away? But you got it, Cindy. Nice job. So Abdulaziz, everything begins with the termination condition. So yeah, it's going to be a 21 range chart. So let's go back and let's go right here at 1048. Man, that market is cranking. And that one did not set up a good look. There's a pretty good example of it right there, Abdulaziz. Starts with a termination condition. That's the most important part, is making sure that price reached an area, guys, because if it's floating out in the middle of nowhere, it's not solid. So Abdulaziz, that's your rule number one, is a termination condition. So if I were making a checklist, that would be the first thing. Next is these fast triggers have to roll. They can't still be up. And honestly, when they're on the wrong side of the large, it's aggressive. But what you'll see is a reversal bar and then a white bar coming off of a termination condition. And the idea is you're anticipating this HVA line. So you're looking for a little pullback to those small triggers. This one didn't give it. But that's essentially the look. It starts with a termination, and this has got to be the first thing. And then the fast triggers roll. White bar prints off of the termination, and you're looking for a little pullback. So let's see. At 36, that's a potential one. Not always. Sometimes it is. So there it is right there. Let me see where that happened. Not sure. 45, 1040. That was the one, not off the termination. There's a lot of consolidation in there. 1015. But that's essentially it. And the problem with it, so the challenge that people have, let's talk about the challenge that people have with this trade. Is one of the challenges that they have is not having a termination condition. And I'm not sure where that one was. There we go. Another challenge that they have, Abdulaziz, is not letting the small triggers roll. But that was it right there. Termination, triggers roll. See how it pulls right back to it? And then it goes down right to the next termination condition. That's a pretty good example. But it takes a little bit of practice, Abdulaziz, and it takes some timing, because the reality is the NASDAQ is fast. Things that you have to watch out for. Just because you have a white bar doesn't necessarily mean that it's a trade. You don't want to trade directly into termination conditions. There was your first push, and it's not from the smalls never rolled. And then once they roll and you get the white bar, there's your pullback right there. And sure enough, it goes all the way up to the mid-band, Abdulaziz. Do you see it? That's your look. That's the perfect look. And honestly, it's just practice. It takes practice. Because it's fast. It's really fast. Does that help a little bit? I certainly know how to take them. I can take them. But lately in life, I haven't been using the market flow a lot. I've been focusing on some other stuff. So here we go. This is NASDAQ once again. Smalls are starting to break. The path is clear. There's my entry window right here. Where are my small triggers? Oh, they're straddling. They're below, but I'm not quite to my area. Oh, they're straddling. I'm gonna hold off. Oh, now we're gonna go. Do you see how fast that happens, NASDAQ users? This is why it's nice to know what you're looking for in the moment. And look at that, I still haven't gotten it. And it may go down from here. But this is my patience piece when I'm trading the NASDAQ. That right there tells me just be calm for a second. We'll see what happens. All right, Miss Jen. Ah! Bad top, odds favorable, no divergence. There's your areas. You had a sell at the reversal bar marker. Realize that the smalls were still below price. They did start to roll up, so you put the order in. So you're welcome, Abdulaziz. Keep those questions coming, man. This is my favorite part, is helping you guys. So do it. So Jen, do you see how they were more than a full bar away? That's your get in at the area look. So let's take a picture of your picture. Yep, so let's do this. Let's only look at your entry chart, see if it blows up a little bit. Just going to try and make it bigger. There we go. So you've got your area circled, right, Jen? You know that you're looking from that fib, from the mid band. That's your point that you want to enter. Does that make sense, everybody? Rules are met on the large chart. Area, inside. So Jen, when you get here, and it happened fast, when you are right here, Look at where your small triggers are. There's room not only for one bar, but there's room for a couple bars before they get hit. That's your look to enter at the area. Because what happens is even if these small triggers act as support and it comes back up, you've got virtually no risk. Oh, you're welcome, Abdulaziz. Does that make sense? And it takes some practice timing it out. It really does. But that's one of those ones where I'm in at the area. That one happens so fast. And then check it out, guys. Remember when we said we didn't get it at the area? They were straddling. Does everyone remember? I don't know if I took the picture. They were straddling the reversal bar marker, and sure enough, it kept pushing up. And by the time you get a close on the other side, it's almost heading that way. But it kept you from getting in at the mid band. Look at that, acting as support. Smalls important in small chart. Yeah, without a doubt. And then once you're all the way up here, guys, you're on the wrong side of everything. Maybe not looking for that trade anymore. That's okay. And then Miss Cindy. Well, you've got fibs everywhere, which make it a little tough. And you get in not at the areas, but rather at the top of the synthetics, and it works out beautifully with all that momentum. Right back to the retest. And this is where, Cindy, a close on the correct side, if it decides it's going to keep going up, you give up about 2 ticks, but you take a lot of the heartache out of it if it decides to go up and not give that reversal bar. Great trade, though, and I love your exit right at trouble. Beautiful. NASDAQ takes some practice, guys. Holy Steve, I'm not sure what to do with this, brother. Jen, I'll get that one in just a second. Odds favorable, everything down. Clears trouble, easy money, quick profits. Nice one, Steve. Odds favorable, clear path. You get below the line, and it's just easy with odds favorable and a clear path. I'm going to ignore that one. Odds favorable. There was your first one. And then you let it get back below the trouble and you just do it again. Beautiful. Another quick pop right down to the trouble. Quick hits. Great money. Nice job, Steve. 2 for 2. Odds favorable, clear path. And then Steve says, you know, I just want to make it both directions. Let me get above everything. Let me clear all the lines. Let me get in and get paid quick. Absolutely gorgeous, Steve. And guys, the NASDAQ's good for these. And then you just do it a second time. Go in the other direction. Large chart says everything's up with nothing in the way. You let it clear on the small chart, get out at trouble. I mean, Steve, it's the odds favorable clear path story, isn't it? A lot of easy money there. Nicely done, man. And then Jen, pink 1-to-1s on the NASDAQ. On the large chart, they're 100% termination conditions, without question. On the small chart, so one of the things with divergence from a 1-to-1, on crude oil, it can be problematic. On NASDAQ, it's even worse. If I get divergence from 1-to-1s on the NASDAQ, I wait for a reversal bar. I wait for some sort of confirmation. And Jen, part of it is just understanding that the NASDAQ doesn't trade like the other markets. So whether it's a yellow or a pink, absolutely, I wait for some sort of confirmation. I wait for a reversal bar. I wait for something to tell me that I've got a fighting chance. Here at 11.11, if you were looking to take that trade, without a doubt, Steve, momentum and a clear path. You know, it's funny because I say it every morning. Once you figure out momentum and a clear path, you'll find a way to make money. And of course, the flip side of that is once you give up your momentum and a clear path, you'll find a way to lose money. And that tends to be a pretty solid truth. But guys, NASDAQ moves 10 times faster and gives 10 times the opportunities. You just have to be a little more aware. And you have to know your rules, without a doubt. You missed the 11 a.m. momentum. You're making charts. That's okay. Steve, the way you're trading, it just doesn't matter, right? You're going to find it. Termination condition. Who thought they were going to go long with a close on the correct side of the small triggers? Anybody? But look, I have momentum, and there's my close. But guys, it's directly into a line that can stop the market. Did anyone do it anyway? Abdulaziz, this is where I would have been looking for one of those white bars. And there it is. White bar, pull back to it, and down it goes. Do you see it, Abdulaziz? And then if you were going to do it the second time, kind of cool. See how we're directly into the mid-band here? All the triggers are up. Abdulaziz, this would be one that I probably wouldn't take. But if you took the first shot, you got down to the mid-band. I hope that makes sense. But it all starts with the termination condition. No clear path, smalls and large, not through. Don't go long, right, Jen? You just don't have to. One of the things, fighting strong triggers, guys, and it may go down here. It's okay. It's okay to not be in every move, especially with the NASDAQ. Your smalls are above the fib. Your large are up strong. You're on the wrong side of the small triggers, guys. You're directly into a mid-band. Jen, there's your divergence from pink 1-to-1s. Lot of red flags, guys. Lot of red flags. And when you start talking to yourself in terms of advantages, what happens is you stop giving money away. But you've got to focus on your rules. So this was built by, does anyone spend any time over there in Traders Chat? I'll need to get mad at him with smalls and large up at the mid-band. He said, oh, they will look for 16 for 67.75 and went long. Why? Because everything's set up, right, Jen? No, it's okay. I know exactly why he did it. And now he's back in trouble. But this is the difference between 27 years and 6 months in. So one of the things that's brilliant about my brother, Jen, and I love it, and I tell him this all the time, is he is so good at catching the moves within the moves. And this is why at the beginning of class, I told you guys, you're going to see people that are at a different place than you, doing things that you don't understand, breaking rules. But Jen, other than the red line, look at the trigger lines. And if we use the language, odds are favorable for the market to continue up. With that much momentum going in, he's going to find an opportunity for the retest. And now we're weak triggers at a fib. Do you see it? So now the advantage going into the fib isn't nearly as much as it was. And look at the reaction. And it still may go up, but that fib is creating a fight. And now we're losing momentum. But everything still says up. And this is why I say once you can read your indicators, Jen, all you have to do is talk to yourself in terms of advantages. What do I have? I had momentum. I had areas for entry. I just didn't have a clear path. Right? Now I don't really have momentum or a clear path. And I can't imagine that an area for entry is enough. And that's where I was going with this one. One of the reasons I say talk to yourself in terms of advantages. I think everybody should build one of these where you take your advantages, print it out, and took 3 pieces of paper. So Jen, on that first one, he didn't have a clear path, but he had momentum and entry area, right? Medium probability. Take a shot. Manage it aggressively. The next one was missing both of them. Am I willing to do it with just an entry area? And it might work, but it's not yet, is it? Do you see the difference between the two? And the challenge with new users, is this looks exactly like this to them. So the person that got in on the correct side down here at the mid band made money all the way up to trouble. And the person that didn't notice that these were weak coming in and took the reversal bar or whatever, they just got stopped out. And they can't figure out the difference between the two, which is why I blanket you guys with very conservative rules in the beginning. Don't trade into termination conditions. Does that make sense? I'm not trying to keep anybody from trades, but there's a huge difference between strong into an area and weak into an area. And you're seeing that difference right now. Pretty awesome. I'm telling you, once you figure things out, and then Jen, this goes back to what direction are the large triggers going? They're still up, right? So maybe no shorts yet, but the longs don't seem to be the right look. So maybe it's a hurry up and do nothing. But with the no trigger through termination, guys, an HVA line gives a great opportunity if you were going to take the short. Right at 59. Maybe next level. And then this HVA says be careful. We may still want to go up. Nothing to do yet. You're welcome for the lesson. I love these lessons. How many advantages are you willing to give up and still take a trade? Right? How much poop is an acceptable amount of poop in your brownies and you'll still eat them? I don't remember who told me that, but it stuck with me. How much sewage in your drinking water is okay before you stop drinking it? 50-50 trade with divergence. The KISS plan says no. It may work. What do you guys want to talk about? Don't make me cut it short on my first day back. I missed you guys. I've got more messages from my brother while I was on vacation. There we go. There was one of my views from the Grand... Those are the Grand Tetons. We were on top of a weather station at 10,000 feet. Above the tree line. Had an amazing view every direction. Oh, hell no, Jen. It's grizzly bear country. There's my oldest son. Handsome fella. And there's my youngest son, hamming it up. No, Jen, there are grizzly bears all over. And I just don't have any desire. And it was 25 degrees Fahrenheit overnight. I was snugly in a bed. Guys, we're still in that range on the S&P. We still haven't broken resistance. Did John say in the other room he was going long? I wonder if he held. What do you guys want to talk about? Oh, yeah. Just going with the trend, Jen. That was last week. But that's the thing, is there's more to it than just mid-band with triggers up, right? I think that's the part you guys have to understand with him, is that he sees and thinks more than he tells. So you gotta go through. Large triggers are still up. For me, this says no shorts. It doesn't mean that I'm going long, but as long as my large triggers, that big slow moving average, are aimed north, guys, I'd rather wait for opportunities to go up. Does that make sense? Remember when we said that in order to be a strong top, the triggers have to roll? Because if it's really going to be a top, they will roll. And it is. I'm glad that he said that. I'm glad that he said that. Because for every 10 things that he takes for granted, you know, there's more going on. But I think the lesson here is that when those large triggers are still up, it's probably going up. So don't get married to any short positions. It's weak triggers, so there's no momentum. But until those large triggers start to roll, guys, there's just no reason to fight it. There we go. Think using order flow, did John go long at 11:18? Hell, I don't know, Steve. I don't know. I finally trained him not to send me messages during class. It took 5 years. But I finally trained him not to do it. But let's go look at 11:18 and see if we can come up with something smart. Right here? Man, I don't know, Steve. Termination, 2 divergences. I don't know. I don't know if he would have done that one or not. He might have. Jonathan. Termination, full reversal, odds favorable on a 50-50. You catch it on the way up. Nicely done. You wait for that little signal. The only thing that I might say, Jonathan, is that your first trouble spot is 61, that divergence high. No reason as you get into that trouble spot to keep $140 a contract risk. Our goal is to keep it, right? So guys, they made it to the 1-to-1s. Weak triggers. NASDAQ's being a pain in the butt, aren't they? That's what it looks like. Fibs catch, or 1-to-1s catch fib overrun a lot of the time. We'll see what happens. All the triggers are above. All the triggers are below. Maybe they're going for the higher point. Maybe they're not. Hell, I don't know. Nice trading though, Jonathan. I like it. Do you like that overlay, that new workspace John did with the market flow on it? Right on. I like it. It's a little busy for me, but I do like it. I think that if you're going to incorporate market flow, it just gives you one less chart to look at. They are grinding. Well, no reason to get out. Everything still says up, right, Jonathan? Everything still says up. I don't know that I would have taken any profits on that one. You like the real market flow? Most important thing is large chart triggers. That's it. Yeah, like the HVA lines. I think it's a little busy. For me personally, it's a little busy for me. I had it set up on mine. I was looking at NASDAQ with it. And I believe I went through and modified the high volume area lines and stuff. I don't remember. I haven't looked at it in a couple weeks. I like that. That's a good target. It's hard to go wrong with that, Jonathan. Beautifully done. Beautifully done. And the large chart has to lead, Andy, and I think that's what people forget. Is when you start putting bells and whistles out there, you're going to let those bells and whistles lead the way. And that is when it becomes problematic, I think. Is when you start adding things, but you forget to go back to basics. Probably email, Steve Diego. Is there anything that I can answer for you? Oh, okay. Get with Jason. If it's a computer thing, I would go Jason before John. Oh, on order flow? When you guys say order flow, do you mean market flow? I don't know if he's doing personal tutorials. Yeah, so Andy, see how I made mine super, super light, those black ones? I found those distracting. I made them really small. Steve, you can ask your questions in here. Believe it or not, I know it. I can teach it. I can answer questions on it. I understand the rules. Yeah, those are probably the big ones, Andy, because when they show up on trend trades and stuff, it's nice. What I see is a lot of people getting in at them arbitrarily. They're like, oh, I've got an HVA line, I have to go long. Oh, I've got an HVA line, I have to go short. And when you've been bored for a while, you'll use anything you can to get into a trade. And Jen, I think that you're absolutely right. It's just weak triggers, right? It might go up. But weak triggers at 1-to-1s, that was a pretty good push. Never got odds favorable momentum here, but every time it had momentum, it tended to continue. So they made it. 3 divergences. So many reasons to not be in that market. They made it. Let's see what they do now that they've made it. If you guys don't think that the other side of the world knows about these fibs, look at that reaction right off of it. That's why you went for bigger lots, so you take away fewer trades. I like it. Almost never get bored to invent your rules. I do it. Guys, if you don't believe that the people in charge know about these key areas, just look. Probably not going to trade directly into support with all the triggers up and above it. But there's your reaction. What do you guys want to talk about? And there's your roll, Jen. Isn't that crazy? You guys could see the fight as they got close, and then once they got there, look at that. I love fibs. If you're not a believer, tell me what it's going to take to make you one. Grind all the way up, and then once they hit it, large triggers roll. Just have to get clear of that fib. There we go. So now we've got odds favorable momentum. Fibs are it. Just circle the tail and see, right, Andy? Potential to break from a good top. Let's look at our triggers from the bottom line to the top line. From the lowest point of resistance to the highest point of resistance. So when they make it, if they make it back, Jen, we're going to see where those small triggers are in reference to the reversal bar marker, right? They're still below. Do we sell it? And now they're coming up. Oh no, let's see what happens. There's my reversal bar. I'll reduce my risk. Come on, let's get the first target. Everything's rolled. I like that. Oh, there's our first target. Should we go break even? Or should we say a divergence will take us out? Nah, we'll just go break even. Let's see if they're going to go down to that next fib, guys. What do you think? We'll let divergence take us out of a trade. So we've got $100 locked in. If this 50-50 decides to hold. And we're on the wrong side of the small triggers. How do you guys feel about it? Next fib, Steve? We'll see. Got big split triggers, a lot of areas. I'm only 50-50. I'd rather get paid. Second divergence should have been an exit condition probably, but we'll see what happens. Just for grins, right? Strong tops or bottoms create advantages. Every indicator says down. I do have my stop just below an area inside of triggers. Probably not the best stop placement, but I'm not willing to give it back into divergences. I've got zero risk. I've already taken profits. But Jen, did you see how that worked? Full bar away, right? Full bar away, and we're out. And now my smalls are above the reversal bar marker. And I've got split triggers. Ran through it again. That's okay. Great exit. Can we run through it again? Yes, we can. 1,000,000 times. When I get to my area, Jen, my small triggers are a full bar away. So I hit sell. Right at the area, right inside of triggers. Because look at the distance all the way down to those small triggers. And then it runs down. And they actually got a little closer. We took the same exit. And then when that divergence prints, I exit. And sure enough, two divergences on a 50-50. Look what it did. And if you were waiting for one of those reversal bars, guys, you never got it. How cool is that? Jen, did you hear me when I said now the small triggers are above the reversal bar marker? So you had to wait for a close on the correct side, and you never got it. What a bacon saver. And now you're just kind of caught in limbo. Everything says up, but it's into a termination. So you weren't going to get in on a reversal bar marker here. That's ridiculous. Everything says up. So great opportunity to get paid on a 50-50. That's okay. We'll go over it every day, Jen. I don't mind adding NASDAQ into the lessons. Yep. So just for grins, if I were looking for a long trade here, do you see how the trigger lines are straddling? What does that mean? Does that mean go at the area? Or does that mean wait for the close on the correct side? It means wait. That's it. And look at how the small triggers created a little push down. And just for grins, let's see what happens if we get to the other side. Of course, I don't have a clear path. But look at that. Isn't that amazing? All you have to do is learn that rule. All you have to do is learn that rule. Pretty cool, right? Not a reversal bar. Close on the correct side. And look at how those small triggers behave as resistance. I love this stuff, guys. NASDAQ is fast. But once you know exactly what you're looking for, it's not nearly as hard as you thought it was. From day one, don't trade into a term. Amen, Jonathan. But this is one of the ways that rules kind of protect you, even if you're breaking your rules, if that makes sense. Yeah, we all have. So now I have a clear path. Don't necessarily have odds favorable momentum. And the small triggers are above the reversal bar marker. Now they're below. And that's the thing that you've got to get. That's a tough one. There's actually no divergence on the 13.2, Jonathan. That's a previous divergence line. So if we're in at the area because they're below the reversal bar marker, where's our first trouble spot? Right there. Do you see it? Doesn't guarantee a win, guys, but look at where the smalls were. Now I've got virtually no risk. And these may act as support. I don't even know. But I'll get paid at it. Get down there. Come on, NASDAQ. At this point, I'm not willing to lose on a trade that close, but we'll see. Jen, did that one make sense? Oh, there's our first target, guys. If they give us divergence off of that one, we'll exit. If they don't, how about we hold for the pink 1-to-1s? There we go. I'm out with the second divergence. I'm willing to exit that one because my small triggers are above the reversal bar marker. Pretty cool. But guys, we just made $500 in the last 5 minutes. Simulating, but following rules. Is there anyone that'd be pissed off on a $500 day? Are we willing to go short with the reversal bar? Off the areas. So that's where you'll right click and use a sell stop. If you're willing to take that next short, you just write on the reversal bar marker, I need to be on the right side of those triggers. And if it doesn't come from somewhere right here, well then it's just not my trade. Thanks, Steve. Let's see what happens. All right, we're in, which means that our risk is established. Doesn't guarantee a winner, but if I was willing to take a shot, at least it puts me in on the right side. Another divergence would take me out, but if it doesn't happen, let's go south. What do you say? All right, I'm into trouble. But my smalls are down, my large are down, my synthetics are down, my smalls are down, my large are down, my path is clear, my risk is established. Let's see what happens. I've got a termination, every trigger down, and a clear path. I kind of like that look, Jonathan. It's not, remember, I'm giving up momentum. And I'm relying on clear path and entry area. And you guys are about to see what the cost of confirmation does. There's that next divergence. Probably going to take us out. Because it's not odds favorable, right? That's not the best momentum, which makes sense that if I'm losing momentum here, it may become problematic. Is everybody with me on that? The reversal bar close on the correct side doesn't guarantee a winner. It just puts you on the right side of the triggers. We should have been out already, but we're just going to let it go because it's simulator. And we're learning stuff, right? We're learning. It's still in the mid bands. I'm already in. My risk is established. Every indicator on every chart says down. There's another reversal bar. Get through there. I need it to get through there. This time I'll exit with divergence. But do you see how everything said down? And I still had areas inside of triggers. I just have to clear this trouble. If it clears, we're good. If it doesn't, whatever. I'm willing to risk $140. Get down there to those 1-to-1s. I'll put it a tick above just in case. Is it going to make it? What do you guys think? Maybe not. We'll see if we get that. Oh, no divergence. I'll keep my stop in place because there wasn't divergence. And it's just a mid-band. That's the only point where the market is most likely to continue. And sure enough, there's a trend trade. Oh my gosh. I can't make this stuff up, guys. What an emotional roller coaster, though. Wouldn't you agree? Third divergence has to be an exit condition, though. So if I get a divergence here, I had to punch the close button. Oh, didn't get it. Didn't get it. I'm still in it. Man, they're making us sweat, aren't they? You got to know why you'll enter, and you've got to know why you'll exit, guys. Go! One tick off a 1-to-1. You know what? Let's just hold it. Let's see. Any questions? Still has to be third divergence for the exit, though, right? I have the potential for it. They filled you. You had 2 ticks. I like it. You might get out of this one better than me. But every indicator on every chart says down, right, Jen? There's that third divergence. I'll take an exit. Man, that was fun though, wasn't it? Jonathan, what additional trade info? Oh, here. Bum, bum, bum. I know I have it somewhere. How do we like the exit? Pretty good, right? I gave up a couple ticks there. So Jonathan, you have to take that Gemify. And you have to download it onto your computer. Are you with me, Jonathan? And then once you download it on your computer, you've got to go Tools, Import, NinjaScript. And then it's going to go in and it's going to find wherever you put it, Gemify Order Line Decorator. And then you're going to open it. And then once you open it, you're going to right click and go to Indicators, Gemify, and it's the Order Line Decorator. So you got to make sure that that goes down into there. And then you click Apply, OK. And then you have to F5 and rerun the NinjaScript, and then it'll show up. Give it a shot. If you need help, Jason can help. Morgan, all that does is it puts in the money, whether it's targets and stops. It shows you how much your targets and stops are worth. Yeah, if you can do math quick, you don't need it. But that works. Well, guys, that was fun. We got to make a little money on Simulator. We got to talk about NASDAQ entries. We got to talk about having a management plan when you're in. We got all the basic rules in there. That feels like a good day. What do you guys think? Those of you that are working on the NASDAQ, don't hesitate. Don't hesitate to ask questions. If you're looking at different markets, if you have questions about different trades, all you have to do is put them in the room. Tell me why you did what you did, guys, and we'll talk about it. My brother is brilliant, and he will take you next level. My job is to get you at the level so that you understand what he's saying. And that's the basics. So good stuff. Guys, go trade well. Man, thanks for that, Andy. Hopefully we got a lot of people doing it. We'll know more on Wednesday. I'll be back tomorrow morning at 9 a.m. and we're